Another wild session on Wall Street today, with big tech sending the Dow, the S&P 500, the NASDAQ all higher after last week's bloodbath. And it's all unfolding amid an escalating battle between the Wall Street establishment and what we're calling just the little guy, namely those guys on Reddit. Let's welcome Portfolio Wealth Advisors CIO Lee Munson. Lee, this story just gets more interesting day by day. But I want to start with this point because a couple of other guests have made this point to me, that it's not just the Reddit investor that got into GameStop, for example, but that it actually was stronger institutions going long, trying to squeeze out those shorts, trying to take on people like Andrew Left from Citron.
Oh, that's exactly what happens. You can't get this type of market cap expansion with some small players. I mean, we love to have this narrative that it's the little guy. And yes, last year we had a couple 100,000 people on Wall Street bets. That's the Reddit thread everybody's talking about. I have my young analysts, track all this stuff. Then we got to 2 million. So we go up tenfold. Now it's almost 8 million. It's a 40-fold increase of how many people are looking at this. But that main thrust are institutional players going full speculation. I think that's what's so sad about this. It's one thing if we have people who don't know what they're doing, want to gamble. But then when pension funds, institutions, reasonable people who know better start fluffing up magic beans, I think it's really sad for the industry. But hey, speculation's a lot of fun.
Well, it is. And there is no rule anywhere in the investing playbook that says you have to invest in a company because you believe in its fundamentals per se. Right. But having said that, what concerns me is that forget the short sellers for a second that have been squeezed out of this. When you look at the institutions and the Reddit traders, for example, that are buying these stocks on Robinhood, these stocks that have been essentially left for dead, at some point, there's going to be a realization in the marketplace that the shorts are out of these trades, and they're going to start selling so that they can book profits at the highest price that they can. And they are not going to coordinate the selling on Reddit the same way they did coordinate the buying. And so somebody's going to be left holding the bag. I can't say it enough times. And if the institutions are involved in this, they could very well be the ones that pull the trigger first, and the little guy gets crushed.
Well, that's exactly how it's going to be. It's already happening. We're already seeing these stocks get crushed. We're already talking about AMC price targets of $1. So the institutions are always going to rule the roost because they have more information about how those markets are trading. So I think we've already seen that, number one. Number two, all you see on Wall Street bets right now are people making these posts saying, we've got to stick together. We've got to hold the bag, so to speak, when there's hardly any more short interest. So anybody who thinks or is under the delusion that this is some type of Occupy Wall Street, let's stick it to the man, you're an absolute fool. You're going to get screwed, and the selling has already begun. What you want to do is you want to look for where the new thing has moved to. And since Friday, really middle of last week, everything on Reddit is about silver, about cornering the silver market. I love it because I'll tell you, silver is a big world. I've been long silver for months now. That has actual institutional interest. It's not a company. It's just this intrinsic thing that is used for industrial metals and as a store of value. I think silver it's going to work because there's far more adult traders and people of the baby boomer generation. They're going to glom onto it. Plus, silver's been undervalued. So I think you got to move away. But anybody who tells you that this is about some type of getting back, they're telling you that because they want you to hold. They want you to hold the bag while pensions exit.
If I can just interrupt you for a moment, because we did look at shares of GameStop and they were down today. And some of the explanation in the media was, Robinhood restricted how many shares, the retail investor could buy. And so they weren't buying it today, even though they wanted to. And that's why the price came down. I'm not so sure that that's the case, to your point. I think one aspect of it was that, some of those institutions said, yes, let's book profits. And two, as you said, there was a little bit of a change in interest, right? So we saw shares of AMC were higher today, and we also saw that move into silver. But to the point on silver, and this is just fascinating to me because I've reported on this, there actually is a fundamental long trade there. Silver, people who are trading silver, people who are long silver will benefit from President Biden's climate change plans, from all of his alternative energy plays. Silver is a key component in electric vehicles, solar panels. So on this one, you may not get burned.
Well, we've been long silver since, I don't know, November, December, based on all those reasons, right? We're going to debase the currency with the type of stimulus. I'm not putting a good judgment call. I'm just saying you're going to debase the currency spending all this money, and gold and silver are going to go up. I think silver is going to be the big knockout hit. I think we can see the '08 levels at 50 an ounce. It is far more undervalued today than where gold is. So there's a catch-up trade. There's an industrial purpose that is so integral into the electrification of our grid that's going to happen. It's going to happen right now. I mean, you can see in the last segment, they're moving full speed ahead.
Yeah.
And also, there's broader interest. Now, is it true there's no net short interest? Sure. But, there's only 50 billion of silver out there in the main ETF trust. Okay, Bitcoin is over $500 billion. So this thing could start flaming out. I would just say my price target, not that anybody cares, but it's a little under 30 right now. At 50, that's where I think the money needs to be taken off the table, but it could go higher. So I would say that if you want to play that has a fundamental thing that happens to be the darling of Wall Street bets right now, that hasn't gone through the roof.
It hasn't.
Must.
And let's make that point. It did not move the way GameStop moved, for example. And that's why I think this is interesting.
No. Yeah, and it's not, and hey, famous last words, I don't think silver is going to quadruple here. But, I mean, to get a double in something real that has a real thesis, that somebody like me who's a CFA that managed money professionally says, a few months ago, this is a solid concept. To be able to have that and the kids behind you with that fervor, I mean, it's like Christmas. Yeah. And so we're very excited about it. And I would just say, if you want to do it mild, buy SLV, the silver trust, buy the physical. If you want to do it wild or kick up the beta, that's when you look at these silver miners. But remember, buying just the physical silver in ETF form is the most reasonable way to make this play, which involves risk of loss and all that stuff. But that's what we're doing. I feel comfortable with it, and I intend to make money.
Really interesting. Lee, thank you so much for that perspective. Great to see you.
Thank you.
All right. Just